Hello, everybody. I'm at Parcaut with Francisco Rubalcava Jr. How you doing, Francisco?
Good, good. How are you doing, sir?
Good. You left off the junior. Wait, you just don't want to be a junior these days?
No, I'm trying to be my own thing now.
You try to be your own man.
No, but yeah, no, I wanted to actually ask you, like what's changed with the mortgage rates within the past week?
Well, last week we saw them rally almost over 200 points, basis points all week. We had a lot of economic indicators come out for unemployment, and unemployment. I think it was three of the things showed that it was worse than what we thought. And then BLS, which is the Bureau of Labor Statistics, came out on Friday, and there's two parts to that report. There is the employer report, which says, basically they're holding on to them as long as they can, and then there's the employee part where they actually call people. So it's a homeowner survey, and they saw that unemployment went from I think it's up to 3.9 something right now. It's on here. I don't know where it's at, but it went up. And because they're showing that they're saying that they got laid off, it's worse than what we know. So what's happening is what we hear from the businesses is different than what we hear at the house. Are you following me there?
Right. So at the house there, substantially.
Well, it's that whole kitchen table issue that supposedly that all the stuff that people talk about around the kitchen table, well, it's coming to really fruition. But the true stuff, we won't really see let me get to it. Okay, bear with me here. I just put a lot of stuff over here so I wouldn't forget. But, we went up to 8%. And then I saw that we went down about a 0.5%, depending on the FICO score where you were at last week. We've given some back today, this week a little bit, but nothing major. Everybody saw that the 10-year note went up to over 5%. And then on Friday, it was down to 4.48%. And that's the big difference.
Right.
So we're seeing the cracks. Let's put it that way. We're seeing the cracks out there actually getting bigger, and it's not as good as what the government says it is.
Right. And I think like to go forward with that as well, like how we've been seeing, now that we saw that drop of that 0.5%, like, do you think that at that moment that leads to, like, is that like, was the 8% like the ceiling per se?
Well, the question is that the top of the market? Are we going backwards now? Are we going down more? That we won't know, because there's a thing called a recession indicator, right? So when they looked at the stuff, unemployment rate has risen 0.5% from its low of 3.4%. Now it's to 3.9%. If you look back historically, the leading indicator recession going back to 1970s is when we see a rise of 0.5% or more of the expansion from the lowest. We see a recession to take place at least 2 months before, when that's going to occur within 2 months. But because of how everything is, we're not going to see that until probably first quarter of next year, just because of how everything is right now. So I think we're at that point finally. We're not going to see that. Hey, it's like the pandemic, right? We knew we were going through something, and we knew we had an economic problem, but we didn't realize that we were in a major 2-year recession until later. Right? That's what happened. You know about recession after it already happened. You're in it. Do you feel like you're in a recession? That's the real question. Do you feel you're better off now than you were almost 4 years ago? No. That's how I feel. I don't, because my industry was destroyed because of the rates going up and what they had to do to stop this stuff from, the inflation. But if you look at this, over the past 12 months, we looked at the low, we looked at everything. I think first quarter of next year, we're going to see that we were in a recession and it started. So that's the confirmation that they're saying we're not going to see that until next year.
Right.
But I think we're going to see it with Christmas shopping and the people not buying as much as they did, because people bought a lot. They're still buying a ton. I don't know where they're getting the money. It's like they're maxing out their credit cards, maxing out everything, not paying their credit card bills. And then, I have extra money now.
Yeah. No, even because like last month I got my credit card bill pretty high. I was able to pay it off, luckily. But it's funny because I got it up, and so many like creditors and stuff started calling me, and they're like, "Oh, we'll take that, that burden off of you, and we'll do it at a super low interest rate." So like starting to see and experience that a lot more, I think it is a big indicator, like exactly like you said, like people don't feel it that much right now, but we're probably already in this recession now.
I know we are.
Yeah.
I mean, you can just talk to people, and everybody's like, I'm getting by. I know
Yeah.
people who've been laid off at, big companies back east, management. And I think the problem's going to be Christmas. They're going to go, hey, here's your Christmas bonus. Go find a new job.
Right.
Unfortunately, but that's, they usually go by the end of the year. They're like, we can't keep them on. We have to let them go. So unfortunately, it's around Christmas. People go, I can't believe they do it around Christmas. Companies do what's best for them.
Mm-hmm.
That, they've been holding on to the people. And that's what I was saying about that business survey. They're showing that they're holding on to people longer than they should. And I think that it's finally, and I keep saying, you can't run a business on hope.
Right.
I hope it's going to get better. I hope rates are going to. So the question, long term, your actual question was, are we going down from here? I don't know.
Yeah. No, it's
Yes, I would love to say for sure. I know for a fact, but nobody will know until for another 30 days or so. Right.
Right.
We'll be in December and we'll start seeing that stuff. Usually, period, because last year at this time, rates went down also a little bit. And then they went back up.
Right.
Right.
No, it was like that. I remember because I purchased in September, and that's when the rates were like they had started, like they were better, right? And then I think it was like as soon, like you're saying, like as soon as we started hitting like February is like when we saw things jump up again. Hopefully it doesn't happen again, right?
Well, Christmas was amazing last year, right? And all that stuff. So that's what are you going to do?
Right. And I think, and with the, like you said, right, where's everybody getting all this money, like all this spending? And, that's the scary part, right? Is like not enough people, I feel, like there's, and recently I've been seeing a lot more of a demand for like those down payment assistance programs, where, and it's a tricky situation, right? Because I always get asked, like about those programs, and people automatically lean towards that because they think it's free money, right?
I mean, they're not bad. It's just you're going to pay for it.
Right. And that's what I tell people is like a lot of the times, and I think it's that mentality that's been instilled, right? Where it's like so much things come for free out of nowhere. You know what I'm saying? And I think it's kind of like not an expectation, but it's something that most people are always looking forward to. But that's what I also explain is it's not always the best to take that route, right? Like it's good to like still have those fundamentals of saving money so that you don't have to rely on those programs.
I mean, I have access to them, but the rate's even higher, and they're forgiven. But I'd much rather you have a lower rate and borrow some money from get a gift from your family.
Yeah.
Then gift back what, because when someone gives you a gift, you always feel like you should give back a gift equal to the amount or more.
Yeah.
Work it out with them to do an equity share, where they gift you the money and you guys until you buy, refinance and pay them off, or you know what I mean, and give them back. You give them the equity and it's an investment for them. Why wouldn't your parents want to help you, but also invest in you?
Right.
Right.
That's something that I think, should definitely be more widespread, because I think a lot of people, there is that stigma where they're like, oh, I just don't want to ask for help, but exactly like you said, that's giving them, it's a win-win.
Yeah, I mean, just ask the question. It doesn't hurt to ask. But a lot of people, because I had a guy who's like, I don't want to ask my family because they'll hold it over me. Well, what do you want to do? Do you want to own a home or don't you want to own a home? And then if they help you, help them. If you split the equity for the first 2 years or 3 years till you can pay them off, there's nothing wrong with that. They're making money too, because sitting that money in a bank account's not doing anything.
Right. I think that's something that, especially right now, because the rates are higher. So finding ways to like get creative in that sense. And again, like you said, all that it is a question at the end of the day. It's just asking for that helping hand.
I mean, if you didn't, if you're a guy and you didn't ask women to go on a date, you'd never date. Aren't just the same fear there? They're going to say no. What's the difference?
Yeah.
Right. And if you're a woman, same thing.
The ultimate fear of rejection.
Yeah, that's how you got to get to in sales. You got to get to so many no's to get to a yes. Right. That's the same thing in dating. You have to. I guess now you just swipe right or left, so it doesn't really count. But you got to do a lot of swiping.
Right. Yeah. The filtering. No, but
So our main question for today. I don't mean if did you have something else to add there, or is that where you're going?
No, yeah, I exactly like you're saying. Is okay. It's just a matter of how ready are you now? I would say, and if you're waiting, what are you waiting for, and also what are you doing to put yourself in a better position for when you feel you're ready?
Correct. And that's the thing. Get my book. I mean, I give them out to my clients to read. Had one the other day. The guy was like, "Ugh, I don't understand." I go, "Remember, you got my book, right?" He goes, "Yeah." I go, "Get to that chapter, read about the loan estimate and the closing disclosure, and you'll fully understand everything that's on there, and it'll make it so much easier." He goes, "Oh, thank you." I said, "Because I could tell you, but you won't remember
Mm.
until that thing comes out. So why don't you go read that, and then we'll talk about it afterwards, because it makes it easier, because I can tell them, not everybody understands unless they're looking at it, and he didn't have it at the time. I meant the disclosure, not my book.
No, well, that's what and your book's a great tool for. I mean, a lot of
What'd you
people.
call me? I'm sorry.
No, no, like the book's great because it's exactly like you said, right? Like we could always reiterate things and everything, but having it there, I mean, there's so many people that, learn even better like that, right? Like
Mhm.
actually having the words laid out in front.
Well, you can always go back to it. What did he say? Let me read the book. And then, oh, that's right. Even if you read it and then someone said something to you, you can always go back, because it has in their closing costs, it has in their prepaids, it has in their escrow, title, all that stuff that we explain, but goes over people's heads so fast because it's all new to them. It's right there. And it's not like it's hard. I'm not talking Moby Dick. It's a very nice, thin book, so you can get through it within 3 hours. And I tell people, you don't have to read the whole thing. Just read the chapters that you need when you need it.
Right.
Or if you're in the beginning and you don't know, read everything.
Definitely.
Anything else there, mister?
No, that's all good.
That's it. So the first question you had today was, with the drop in rates, are we going to continue to see them go down? I hope so. But I think the question will be, how much are they going to give back this week from it? Because there's always, when there's a rally in the market, like we had last week with the bond market and the stock market, they usually give back those earnings in the first few days of the following week. And I think we're going to see some. I think we were down on Monday 31. I don't know what we're down right now. So that doesn't mean it's going to go up from here. It just means they're giving some back. And then because it's like stocks and interest rates are like stairs. They don't go directly up. They go up and I mean, they're stairs. And that's what is going on right now.
Yeah. No, I tell people all the time, like exactly like you said, it's stairs, but if you zoom it out, it's just
A straight line.
yeah.
Yeah, it's like rents. They're definitely like a straight line, with rents.
Yeah.
All right. Well, thanks for coming in today. I appreciate it.
No, thank you for having me.
Oh, my pleasure. And I hope we answered your questions. If not, please reach out to both of us. Easiest way to find me, you can direct message me at Parcaut everywhere. And you can go to Francisco Rubalcava Jr., give him a phone call or a call at his phone. I can't even talk today, 209-493-2400, 493-2400. All right, sir. Thank you. Make it a great day.